You have been told your entire life that the absolute safest financial decision you can make is to buy a diversified index fund. You were told that by putting a piece of your paycheck into a 401k every single month, your money is magically spread across 500 different companies, mathematically protecting you from the collapse of any single stock. That is a mathematical lie. Your retirement account is no longer a safety net. It has been quietly weaponized into a highly concentrated, leveraged casino bet on artificial intelligence. And the worst part, Wall Street never even asked for your permission. Welcome back to the channel. Today we are exposing the 2026 retirement trap. We are going to rip open the hood of the American 401k system and look at the terrifying, unvarnished numbers that asset managers are desperately trying to hide from you. By the end of this video, you will understand exactly how the system has engineered a catastrophic bubble using your life savings, and I will give you the exact tactical blueprint to protect your money before the market completely unwinds. Let us start with the psychological betrayal of the American middle class. This is not a story about irresponsible people day trading meme stocks or gambling their rent money on crypto. This is a story about the people who did everything right. The people who followed the rules. You enrolled in the responsible, boring, set it and forget it retirement plan at your job. You trusted the financial advisors who told you that target date funds and S&P 500 index funds were the bedrock of a secure future. But what you were never told is that the architecture of these funds has fundamentally changed. The diversification you think you're buying is a phantom. It does not exist anymore. To understand how you are being trapped, you must understand the dark mechanics of something called cap weighting. When you buy into an S&P 500 index fund through your 401k, your money is not divided equally among 500 companies. It is divided based on how big those companies are. The bigger a company gets, the more of your paycheck automatically gets shoveled into its stock every single time you get paid. This creates a blind, self-reinforcing concentration machine. You are mechanically forced to buy at the absolute top of the market. And right now, that machine has pushed the American retirement system to the brink of disaster. Let us look at the brutal, undeniable data. Back in 2015, the top 10 companies in the S&P 500 made up roughly 19% of the entire index. That was considered a normal, healthy level of concentration. But by 2000, that figure had violently exploded to nearly 41%. Let me repeat that so it sinks in. 41% of your entire diversified retirement portfolio is locked into just 10 mega-cap tech corporations, and the underlying math is completely broken. While those top 10 companies consume 41% of your money, they only account for 32% of the actual earnings. You are wildly overpaying for a tech bubble, and you don't even realize it. To put this terrifying concentration into perspective, we have to look back at the dot-com crash of the year 2000. Back then, when the entire tech sector went up in flames and vaporized trillions of dollars in middle-class wealth, the top 10 stocks only represented about 25% of the index. Today, we are sitting at over 40%. The current concentration in your 401k dramatically exceeds the peak of the most catastrophic tech bubble in modern human history. And the driving force behind this massive bubble is artificial intelligence. Wall Street has taken your hard-earned retirement savings and shoved it all to the center of the table in a blind bet on AI. Tech leaders have championed roughly $750 billion in AI infrastructure spending this year alone. They are in a debt-funded capital expenditure race, building massive data centers and buying millions of microchips, hoping that AI will eventually turn a profit. Wall Street has priced all of this speculative future growth into the stock valuations right now, well ahead of any proven sustainable returns. But the cracks are already starting to show, and they are spreading fast. This isn't just theoretical fear-mongering. The unwind has already begun. Nvidia, the undisputed darling of the AI boom, has already shed over 10% since its May peak. The Philadelphia Semiconductor Index has given back more than 11% since June. And right now, nearly 60% of all S&P 500 tech stocks are already down 20% or more from their recent highs. In July, we witnessed a massive hedge fund leverage unwind, exposing exactly how fragile the financing behind these AI bets truly is. When the smart money on Wall Street starts quietly unwinding their positions, who do you think is left holding the bag? You are. Your automated 401k contributions are acting as the exit liquidity for billionaires. Every time your paycheck hits your account, your retirement plan blindly buys the AI stocks that hedge funds are desperately trying to sell. Let us take a moment to expose the biggest lie inside your retirement portfolio, the target date fund. If you're like 80% of the American middle class, you probably checked a box for a fund labeled Retirement 2045 or 2050 when you got hired. Human Resources told you this was the ultimate safety net because it automatically shifts your money from risky stocks to safe bonds as you get older. They told you a team of Wall Street geniuses was actively managing your risk. That is a complete illusion. If you actually open the prospectus of a target date fund, you will discover that it is just a hollow wrapper. It is a fund of funds. And what is inside that wrapper? The exact same cap-weighted index funds completely dominated by the artificial intelligence bubble. You are paying an extra layer of management fees for a Wall Street algorithm that is blindly funneling your money into the exact same 10 mega corporations. When the AI bubble bursts, being in a target date fund will not save you. It will just mean you're paying higher fees while your portfolio bleeds out. Imagine waking up one Tuesday morning in 2026. You log into your retirement app while drinking your coffee, expecting to see the compound interest of 20 years of hard labor. Instead, you see that 30, 40, or even 50% of your net worth has been completely vaporized overnight. This is not science fiction. This is exactly what happened to an entire generation of workers in 2000 and 2008. The system relies on your financial amnesia. They need you to forget that the stock market is capable of wiping out a decade of your physical labor in just 6 months of trading. And this is where the story gets incredibly dark. The enemy here is not a single mustache-twirling villain. The enemy is the system itself. It is a system where no one has to be explicitly evil for millions of people to get completely wiped out. Look at the massive asset managers and plan providers. The trillion-dollar institutions running your 401k. They collect massive assets under management fees on your diversified default fund, regardless of how dangerously concentrated it quietly becomes. They get paid whether the market goes up or whether the market crashes. And legally, they have absolutely no obligation to warn you that your safety net has turned into a concentrated AI tech fund. But someone is finally sounding the alarm. Last month, a draft report from the United States Treasury itself quietly circulated in Washington. The Treasury report issued a direct warning. The current AI bubble and the massive concentration in index funds could put millions of Americans' retirement savings at severe risk. When the U.S. government is privately drafting reports warning that your 401k might implode, it is time to wake up and take immediate action. So what have we learned today? We have learned that the concept of a safe, diversified index fund is currently a mathematical lie. We have learned that over 40% of your retirement is controlled by just 10 megacorporations. We have learned that target date funds are just expensive illusions wrapping the exact same toxic assets. We have learned that Wall Street is using your automated 401k contributions to fund a $750 billion speculative AI casino. And we have learned that the US Treasury is already preparing for the fallout. Because retirement savings are unredoable. You cannot simply work another 20 years to earn back the time and the compound interest that you lose in a market crash. You must take extreme ownership of your portfolio today. You cannot wait for Human Resources or your plan administrator to save you. Here's your hyper-aggressive, step-by-step defense blueprint to protect your life savings from the 2026 AI trap. Strategy number 1. You must immediately audit your exact 401k exposure. Do not just look at the total balance on your app. You need to log into your provider's portal on a desktop computer Open your specific target date fund or index fund and click on Holdings. You need to see with your own eyes exactly what percentage of your life savings is currently tied to Nvidia, Microsoft, Apple, and the semiconductor industry. Once you see the true concentration, the illusion of safety will permanently vanish. Strategy number 2, demand access to equal weight index funds. The fatal flaw in your current plan is cap weighting. You must look through your plan's investment options and search for an S&P 500 equal weight fund. In an equal weight fund, all 500 companies get exactly 0.2% of your money. It mathematically forces your portfolio to sell high and buy low and completely insulates you from the top-heavy AI bubble. If your employer does not offer an equal weight option, you need to march into your HR department tomorrow morning and demand that they add one to the plan to fulfill their fiduciary duty. Strategy number 3, weaponize the self-directed brokerage window. Many modern 401k plans have a hidden feature called a brokerage window, or a PCRA. This allows you to move your money out of the pre-packaged, highly concentrated trap funds and gives you the freedom to buy individual treasury bonds, gold ETFs, or defensive sector funds directly within your tax-advantaged account. You must call your plan provider today and ask if this window is available to you. Strategy number 4, rebalance into tangible reality. If you are locked into a rigid plan with terrible options, you must manually redirect your future contributions away from large-cap growth funds. Shift your income and money toward mid-cap value funds, small-cap companies, or dividend-paying industrial and utility funds. You must move your capital away from speculative AI promises and anchor it to companies that generate real cash flow in the physical economy today. The 2026 economy is a machine designed to transfer the wealth of the responsible middle class into the pockets of the financial elite. They are using the guise of safe retirement planning to fund their speculative AI bets. The only way to survive is to shatter the illusion of the set it and forget it mentality. You must become the active CEO of your own retirement.